Okay, so my topic for today is reviewing bull and bear markets. So it's a look back in the PSE's past 25 years. Um, it's more of talking about the history of the PSE as well as what has transpired and how it has performed in the past 25 years. So with this, I think allow me to start with an introduction of the PSE along with its reforms because the reforms that were created over the past 25 years made what PSE is today, the PSE that we see today, and the market performance that we're experiencing today. And then we'll go into a deeper dive into the bull and bear markets that we have seen over the past 25 years. And of course, I'm sure you're all interested to know what else can we look forward to for the rest of the year. And finally, I will be summarizing everything that we talked about during the course of this hour with some key takeaways. So let's start. So the PSE, it's the only equities exchange in the Philippines. We are a product of the unification of the Manila and Makati stock exchanges. So the Manila Stock Exchange was established in 1927, while the Makati Stock Exchange was established in 1963. So in 1992, we were unified to form the PSE. So we are actually celebrating our 30th year as a unified exchange this year. But while we were unified in 1992, we started our operations only in 1994. And then from a shareholder-based, member-based organization, PSE used to be owned by member brokers. We were demutualized and we became a stock corporation and finally becoming a publicly listed company in 2003. So this means that you can actually also trade PSE shares at the PSE. So our main product is cash equities, but we're hoping to expand this in the near future. We are a self-regulatory organization. So what does that mean? It means that we can create and implement our own rules. Right now, we have 126 active brokers and 279 listed companies. I've talked about reforms earlier in the introduction. I think this is very important to know so we can appreciate what PSE became today. So I've divided this into both structural and legislative support that we receive from the government. So in terms of structural reform, the most important thing is the legislation of the year 2000 Securities Regulation Code. It actually aims to regulate the issuance and the trading of securities in the Philippines with its ultimate goal of providing and a fair and a self-regulating market. So it has provisions mainly focused on investor protection. And then I mentioned earlier the demutualization of the PSE. When we became a shareholder-based organization, so it actually improved our corporate governance as well. So setting a good standard for our listed companies and our broker dealers as well. We also have a securities investor protection fund. So you can see this as similar to PDIC. So when you deposit your money in the banks, so there's an insurance that comes with it. So similarly, if a trading participant holds or liquidates its assets, then the investors would be secured of their investments through this fund. And then finally, in terms of structure, we incorporated several subsidiaries which has distinct mandates. So first is the Securities Clearing Corporation of the Philippines, which became fully owned subsidiary by the PSE in 2006. Um, it's the clearing house. So for every trade, it's the central counterparty. So meaning, so for every buying transaction, it's the seller, and for every selling transaction, it acts as the buyer. So you're assured that the transaction will be completed, would be a done transaction. So that's the primary role of our Securities Clearing Corporation. And then in 2011, we established the Capital Markets Integrity Corporation. So it's the market regulation arm of the PSE. It's an independent subsidiary, so we can actually separate our business interests with our regulating arm. So there's going to be no conflicts, and actually being at par with the standards of our peers in the region. And most recently, in 2019, we established Premier Software Enterprise Incorporated. So this is our IT subsidiary, which takes care of all our innovative and software development activities, which would hopefully drive our thrust to go digital, to complete a digital journey for our investors. In terms of legislation, we received support from the government. So in 2009, the secondary trading of shares of stock are exempted from documentary stamp tax. So this actually reduced the friction costs for our investors. We have the Personal Equity Retirement Account Act and also the Real Estate Investment Trust Act. So these are products that the retail investors can avail into. I think REITs are the most popular product these days, given the number of listings that we've had last year. And then lastly, to encourage our issuers to list, we also are thankful for the removal of the IPO tax, which coincided with the Bayanihan Act in 2020. In terms of PSE rules across the 25 years, we've also enhanced them in terms of trading, listing, and disclosure. So in terms of trading, as you know, we extended our trading hours to full day trading because we would want to encourage our foreign investors to participate in the market. And then we also have direct market access, which is also to bolster liquidity. In 2020, as a response to the COVID pandemic, we amended our rule on static threshold. So before, our threshold for price increases and decreases are at 50%. However, with the amendment of the rule, the static threshold for the lower end was reduced to 30%. And then also, in response to what happened in 2020, we amended our circuit breaker from a single level circuit breaker to a 3-level one. In terms of listing, to encourage more listing and also trading in the Philippine market, we amended our rule on minimum public ownership. So this started in 2010. We require our listed companies to float at least 10% of their outstanding shares to remain listed in the PSE. However, we have a more stringent rule of floating 20% of the outstanding shares when you are listing for an IPO. Amended rules on listing by way of introduction. This is for the cross-listing of companies. So if, for example, if you're listed abroad, you can also list your shares here in the Philippines. So we have, I think, 3 companies that are cross-listed abroad. So there are 2 insurance companies and also Del Monte. We also relaxed our listing requirements for oil and renewable energy firms. I think this is for reducing their operating history requirements given the nature of their business. And then more recently, we liberalized our listing requirements for domain and SME board. We also provided COVID relief for our would-be issuers. In terms of disclosure, so mainly to protect our investors and to ensure that our issuers are properly disclosing their material information to the public, we've instituted the blackout rule, selective disclosure rule, and 10-minute rule. And also to ensure that we would be at par with international standards, we make sure that the financial reports of our listed companies are IAS compliant, and also in terms of reporting requirements for mining companies, so we adopted the Philippine Mineral Reporting Code. In terms of investment options, so while we're still a cash equities only market, we instilled several products and services that investors and issuers alike can avail to. So we have securities borrowing and lending. While it's already implemented only for sales management, we are looking forward to the final implementation of short selling in the near term. We have exchange traded funds, which was launched in 2013. So we also look forward to increasing the number of ETFs in the market. Currently we have one. It's a First Metro ETF. And then in 2013, we also launched our Sharia compliant securities. So these are securities that are compliant with the Sharia law. So there's certain business screening and financial screening that's being conducted. There's 65 Sharia compliant companies at present. In terms of PPP company listings, to encourage them, we also released our supplemental rules for that. Instead of having an operating history requirement, we just required more disclosure documents from these PPP firms. And then dollar-denominated securities was launched in 2017. These are securities listed, traded, and settled in US dollars. So this one is to actually encourage our Filipino investors which have dollar accounts to invest their dollars instead of just keeping them in the banks. And then lastly, more recently, real estate investment trusts. So this is a very good investment because it actually distributes 90% of its distributable income as dividends. In terms of technology, the PSE is constantly innovating and investing in technology as well. So our trading system is powered by NASDAQ, which was launched in 2015. And then in terms of investor protection, so we use total market surveillance, which is in partnership with the Korea Exchange, which was launched in May 2012. We also have several applications that's already launched, and you can actually download and avail of. So there's PSE Edge, or our electronic disclosure generation engine. This is a repository for all the disclosures of our listed companies. We also have PSE TradeX. It's our internet-based online trading platform. And then PSE Easy, or PSE Electronic Allocation System. It's for the subscription to IPO shares, but we're looking to expand this to other forms of offerings. And then lastly, we modernized our PSE website. So it would have a more intuitive and user-friendly interface that's optimized to be more responsive to the different devices that you're using. So summing all up, all the initiatives and also the reforms that we've had through the past 25 years, it actually lead us to several breakout levels and milestone levels for the PSE. So it actually, these reforms forms part of how the PSE has performed across the 25 years. We're starting with the base date for the PSEI, which is in 1990 at 1,022 points, and we went all the way up to 9,000 points in 2018. So later on, we'll be seeing what happened in between these years and why it happened, how the market has performed and how it broke out to these levels. Looking at the graph across the 25 years of the PSE, so you can see here that um, there are more green arrows, which is a good thing actually. It means that this shows you the annual growth rate per year from 1997 to 2021. So there are more green arrows. There's 15 of them to be exact, and then 10 red arrows. So in total, the growth rate from 1997 to the close of 2021, it's about 124%, or at an average of 6.8%. So we'll look at this in more detail later on. We'll be dividing it into the bull runs and the bear markets later on. In tandem with the increase in the PSEI was also the growth in our other stock market indicators like the domestic market capitalization. So what is the domestic market capitalization? It's actually the market value of all domestic companies listed in the PSE. So if you compare where we are in 1997, it actually grew to 14.56 trillion now. So our over 270 companies make up about 14.56 trillion pesos in terms of market value. This is 11.6 times the growth. So it actually reflects the market prices that the improvements or the gains in stock market prices. And then looking at the right-hand side of the slide, the total value turnover has also grown, but it's not as smooth as how it is in the domestic market capitalization. It's still 3.8 times what it was in 1997. So we're trading at about 2.23 trillion pesos a year. A bit still lower than the all-time high in 2013. I think in 2013 was when we first had our investment grade from our credit rating agencies. Looking at the foreign versus local share and total value turnover, as you can see, it's not the trend is not fixed. It's more movable and changing. So I think this depends largely on the economic growth of the country. So if there's an economic downturn, the foreigners also tend to shy away from our market, from all emerging markets actually. So what's very important right now is to actually strengthen our local retail shareholder base. So just to point out a few years. So for example, in 2009, the foreign participation was at 32.4%. So this is when there's an economic downturn due to the global financial crisis. As you can see, it's sort of parallel to what happened in 2021 as well. And then in terms of retail versus institutional trading, this is a bright spot for the PSE because we're happy to note that there are more retail investors participating in our market now rather than some years ago back in 2013. So our total value turnover is comprised of 31% retail in 2021. So aligned with the growth of our retail transactions is also the growth of our stock market accounts. So right now we have about 1.4 million stock market accounts. So this is a 12.1% growth rate, compound annual growth rate from what it was in 2008, which is just less than 500,000. What's good to note here is that most of our, the orange graph actually shows you the online accounts. So most of our investors are trading through online. In terms of capital raising, we actually reached our another milestone last year. So we reached our all-time high in terms of total capital raised at 234.48 million. So even though the pandemic is still present, I can see and say that the companies are actually um, trying to recover. So for their funding needs, they turned to the capital markets. So comparing this with how we were back in 1997, which was when the Asian financial crisis started, um, it's 7.2 times in terms of growth. In terms of the total number of listed companies, so we have about 276 in 2021. So this is just 1.2 times the growth of what it was in 1997. So we'll have more marketing initiatives, which later on I can actually breeze through um, to actually encourage more issuers to list in our market. So let's go to the meat of the presentation. So bull and bear markets. Generally, well, there's not one standard definition. So, but generally, a bull market signifies an extended upward trajectory with the stock prices rising by at least 20% from its most recent low. While the bear market is the opposite, so it has to be a continuous downward trend with the stock prices falling at least 20% or more from its peak. So across the 25 years, so this is similar to the graph I've shown earlier, we saw two phases of bull market cycles. So this was when in 2002 to 2007, so it's a 5-year bull market with the index growing by at least 28.9% a year. And then we had a downturn between 2007 and 2008. So that's the global financial crisis. And then just 1 year after, we started another bull run, 2008 to 2014. So this is a 6-year run with an average growth of 25.3%. So what happened during those years? I could say that the corporate earnings also grew in tandem with the PSEI. So the fundamentals of the companies itself, they're also growing. So while the data only provides from the year 2005 to 2021, we can take a look at the second bull run that I mentioned earlier. So from a low of 199 billion in 2008, actually the corporate earnings actually rose to 582.15 billion. Looking at it in a more macro perspective, so in terms of the Philippine economy, you could say that during this bull run, this bull market years, the economy also grew. So from 2003 to 2007, the average GDP growth was at 5.7%, while from 2009 to 2014, the average was at 5.4%. So what drove the GDP to rise by that much and support our the climb of the PSEI? So I could say that the Philippine fundamentals improved over the years. So as mentioned earlier in 2013, since 2013, the Philippines has actually enjoyed investment grade ratings. We also have robust dollar earnings from our OFW remittances as well as the BPO service revenues. And then in terms of debt to GDP ratio, they had been in historic lows prior to the pandemic. So this allowed us or the government some room to borrow more to address the COVID situation that we have right now. Since we have robust dollar earnings, our GIR or the gross international reserve is at a record high, while the overall balance of payments remains at a surplus. And then through the course of the 25 years, though there may be volatilities in between, but the inflation rate continues to be benign and mostly within targets of our central bank. So on the other side of the fence, so let's look at the bear markets. We've had two bull cycles over the course of 25 years, but we have four bear market cycles um, in the PSEI over the same 25-year period. But these bust cycles in the Philippine market do not last very long. And as you can observe in this graph, even though there are bear market cycles in between, the general trend of the graph is still upward tilting. So we'll look at each bear cycles in more detail in the next slide. So okay, so the four bear market cycles that we mentioned in the graph earlier. So the 1997 Asian financial crisis, which was mainly brought about by the devaluation of the Thai baht, which affected our other Asian currencies and Asian markets, so including the Philippines. So during the course of this year, during the course of that year, so the highest point that the PSEI reached was about 3,400 level before it actually descended. So it went to its lowest point at 1,082 points in September 11, 1990. So for this decline, it took about 20 months for the PSEI to reach its lowest point, and the decline is about 69%. Just as we are still recovering from the Asian financial crisis, the Philippines is again hit by another crisis. So it's the year 2000 political crisis, as well as the US tech bubble. Coupled with it was other geopolitical crisis. So it was when the 9/11 happened and also the US-Iraq war. And so during this period, we noted a high of about 2,600 points in 1999. And then it moved to its lowest point at about 979 points in 2001. So with this particular period, it spanned about 28 months to reach a 62% decline in the PSEI. And then years after, so after the bull run that I've mentioned earlier, we faced the global financial crisis. So we actually reached an all-time high that time in October 8, 2007 at about 3,800 points. But as the global financial crisis broke out, the folding of the Lehman Brothers, then the PSEI was also gravely affected. So we closed at about 1,700 points, or losing about 56% in terms of value within a span of 13 months. So as you can observe, the duration of the decline is actually reducing. So from 20 months, 28 months to about 13 months. And most recently, the 2020 COVID pandemic that we are still experiencing right now. So from the high of about 7,300 points back in Feb 2020, when the US CDC announced that COVID is a global pandemic. It took us 1 month to decline about 37% in the PSEI to a low of 4,623 points. So comparing this with our most recent all-time high in 2018, this is a 49% decline. So the lengthened months is about 26 months, a little over 2 years. So, but then the bust cycles are shorter, and also historically our market actually recovers. So markets actually recover from crisis events to eventually establish new highs. Although you can see in this table, it took quite a while for the 1997 Asian financial crisis to recover back to its 3,400 level. So it took it about 9 years to go back to that level. But I think because of the overlapping crisis that happened during that particular period. So after the financial crisis, as mentioned, the political crisis happened. So it took a longer time for the market to recover. So in terms of the 2008 global financial crisis, it took us 23 months to go back to about 3,900 level. So that was in September 9, 2010. Actually, during this pandemic that we're experiencing, we've actually regained our footing back to how we were in pre pre-pandemic high of about 7,300 points. So it took us 20 months. This was in November 2021. However, because of the recent events that's happening, because of the external events that's happening, and also um, we should still remain cautious over the COVID pandemic. So we still don't know. There's still uncertainties that looms about what's to happen in the future and when we can reach our all-time high again of about 9,000 points. Looking at the market's performance yesterday and today, actually it's just a little up today. We again closed at 6,900 points. So mainly because we're affected by the rise in oil prices due to the Russian invasion of Ukraine. While we're not directly importing our oil from Russia, well, there could be supply disruptions and price increases across the global oil prices. So this has been reflected in the index today. But if you look at our lowest close in March, so even though we're at the 6,900 level, it's still 50% up from the 4,600 close that we reached in March 2020. But in terms of reaching our all-time high level of 9,000 points, we're still shy of 23%. Okay, so this is to just talk about what we can expect for the rest of the year and in the near future in terms of PSE's initiatives and also I guess the market performance as a whole. There in the beginning of the year, there were many analysts that said that the market is seen to actually return to pre-pandemic levels. But of course, we have to be cautious that risks remain. So following are the risks that we are to watch out for. So the management of the COVID health crisis. So in terms of addressing vaccine hesitancy and also expediting the rollout of vaccines to achieve our herd immunity targets. And then, of course, recalibration of COVID response as they discover many other new variants of this disease. And then we have the 2022 Philippine national elections. So this is a boost in economic activity, primarily from election spending, but then it's sort of a double-edged sword because with an increased spending, it may also pose as an inflationary risk. And of course, some political risk may also cause some volatility. And then, of course, more recent news, rising commodity prices. So with the Russia's invasion of Ukraine, it's to push the commodity prices higher. So it actually threatens not just our recovery, but the global economic recovery. But our BSP remains accommodative. So they continue to keep an accommodative policy stance and just to actually give the economy a boost in domestic demand. So I'm not sure what the actions would be in the next policy committee meetings, but yeah, they continue to keep an accommodative stance for now. In terms of some sectors to watch out for, so given the situation that we have right now, so we're at alert level 1, so the economy is slowly opening up. So we see that there would be, because of the increased mobility and the pent-up demand, this would boost spending for non-essential products and also drive up consumption. While most of us are working on site these days, we see that some would still have hybrid setups. So the media and telecom sector would still thrive, especially media because of the election-related ads. And then in terms of banking, since the policy stance is accommodative, businesses are expected to take advantage of the low interest rate environment. And of course, the return of consumer confidence would likely accelerate lending growth. With the work from home setup and also the opening up of the economy, demand will come from energy demand will come from industrial and commercial fronts as well. And then with the sustainability becoming the norm, investments on renewable energy may also see traction. And then lastly, of course, the property sector with commercial leasing activities expected to recover as the economy reopens. And also REITs remain attractive to our prospective issuers as well as the investing public. What can you look forward to on PSE's front? So we're looking forward to the launch of two new indices, which is the dividend yield index and the mid cap index. Our target launch for this is within this month of March. So these two new indices would hopefully encourage more trading for non-PSEI securities and also provide investors with additional tools to track market performance. So they want to look at the companies that give out high dividend yields or the companies that capture the performance of our mid-sized companies. So this would also offer alternative indices that may be used as benchmark for new ETFs or new investment funds. There are also more digital solutions coming underway. So foremost for our retail investors for market education, we have the new PSE Academy website, which is slated to launch within the second quarter of this year. And then to empower our investors to analyze data on their own and democratize access to market data, we look forward to the launch of the data analytics platform. So for the mobile version, it should be within the first half of the year, and for the web portal within the second half of the year. We also look forward to PSEEC Phase 2. So we want to integrate an online payment system for IPO subscriptions and also expand to other forms of public offerings such as SROs and retail treasury bonds. So the target launch for this is 2Q 2022. We actually rolled out PSEEC for our follow-on offering as well. We are changing our clearing and settlement system. So the new system is expected to go live in the second quarter of this year. Following thereafter is a T+2 settlement cycle. And then we also have a project called the eKYC platform. This supposedly to facilitate online KYC for new stock market clients and standardize information sharing between investors, TPs, and regulators. So this would make opening of accounts for new stock market investors easier. So it's going to be through a mobile app or through a web portal. So the target launch of this is within the year. Lastly, the PSE is also exploring the development of a platform for digital assets. So after everything, the reforms that happened. So what are our key takeaways? So the Philippine stock market has evolved in the last 3 decades. As mentioned, it's both a collaboration between the PSE, the market, the stock market itself, including its stakeholders like the investors and the issuers alike, as well as our regulators, um, to put reforms in place and actually um, improve the services of the stock market as well as its performance. Second point, bust cycles do not last very long. And the stock market has a proven track record of recovery from past crises. So whatever it is that's happening now, well, what goes down must come up, right? So um, as proven by what happened in the past, so our market will eventually recover. So binding all the two together, reforms that were instituted in the past shape the way that we are today and will aid our continued growth post recovery. With that, I thank you for your attention. And